the markets then. You are Bhatt, the director of Dalton Capital Advisors, joins in now. Mr. Bhatt, afternoon. We're back at the 11,000 mark, and the last time we hit it, it was on the 8th of February. But at that time, the midcap was, the midcap index was crumbling. The stocks were down 50, 60%. Now the situation feels a lot different when we're back at the 11,000 mark because the midcap rally has been quite strong in that period. What is your sense now? Where are we positioned? How do you see the next few months pan out till the elections?
Well, of course, there's a better participation now. I mean, it's more sort of broad-based sort of rise. But I think, the outcome of the election is going to be very important. Saturday, we're going to have the election dates announced. So after that, I mean, all these alliances are being formed. So once the alliances are firmed up, I think the first opinion poll after that will probably give direction to the market, because now the base case after what has happened over the last about week is that the same dispensation will come back. But if there is some indication to the contrary in the first opinion polls that we get after all the alliances are formed.
When should we expect the first opinion poll?
Should be, I think, in the next 10 days. I think we should get opinion polls saying whatever they think, because after all these events there might be a sort of change of opinion. Because yesterday there was in your own channel there was some something about the popularity of the Prime Minister and all that. I mean, he's hit the roof in terms of popularity, but whether it gets translated into seats is something that we have to see in the first opinion polls. And after that, I think if because that is the base case today. So if that is not proved by opinion polls, then I think there might be some easing of the rise that we're seeing.
And if the opinion polls tell you that perhaps this government will continue, then how do you trade?
Then I think that is the base case, so therefore it's already in the price. But it will probably go up a bit, but not much more.
That's my question. Good afternoon, sir. Thank you so much for joining in. With politics, I think there's many a slip between the cup and the lip. That's how it really plays out. Poll of polls, and finally when we see the outcome, numbers might vary. But here's the thing. Now, if this mid-cap rally, this 10-12% bounce that we've seen from the lows on the mid-cap index, if that is entirely premised on a favourable election outcome, a market favourable, so to speak, then that also runs the risk of coming undone very quickly if the political winds and the expectations change. So are you saying that this rally is entirely based on political expectations and not really a fundamental resurgence in interest?
The fundamental resurgence, there is really nothing that has changed. Even when it was 30-40% lower, it was probably the fundamentals have not changed. So I think probably there is reason for us to believe that the initial run up in the mid and small cap, where they were much more expensive than the large caps, that itself probably was not justified. So somewhere down the line, people realized that we've taken it too far, and the correction happened. But now there is a resurgence of faith that things will be back to normal, and the same formation will come back and probably come. All said and done, the biggest sort of disruptor, that is GST, that is sort of more or less stabilized now. So therefore, the smaller mid cap, which bore the brunt of that. So that I think they are more or less managed to negotiate that, and so therefore I think things should sort of improve from here. But whether valuations reflect much more than that is something that we need to justify.
You said in the base case the markets can move up a little bit, but not too much.
Yeah.
But there is a possibility that the markets can correct if the current dispensation doesn't continue. What about the mid-cap rally? Has that catch-up rally already taken place, or is there more to go?
Well, I think the catch-up rally has already happened, because from the steep correction they have recovered a bit. Basically, I don't see there is a great case for these mid caps to be quoting at these levels, because we have not seen dramatic earnings growth increases, or suddenly high ROEs or anything like that. They seem to be continuing to be doing what they were doing earlier. So suddenly there was a complete sort of re-rating of these companies, and I think some amount of realism has come back, and so therefore it is corrected. But so therefore it has had somewhat a small rally after the correction, and I think it is thus far and no further. I don't think there is a great fundamental case for it to go up dramatically from here.
Okay, by the way, there are some updates coming in on steel from China. Let's just go through some of those flashes. Reuters is reporting the Tata Steel, by the way, is at the highest point of the day. So China is cutting steel capacity by 14 million tons, and this is a pretty large region in China where there are a lot of steel mills. There's a rebound on steel stocks in general. We've seen that play out over the last couple of weeks as well. Right now, days high on both Tata Steel, JSW, even SAIL is moving higher. Since this is a news that's happening as we speak, Mr. Bhatt, what would your call be on ferrous stocks? Because we've seen these expectations build back up of a price increase. Demand has been pretty decent. What would you do with ferrous?
Well, what you're saying about the China story that they're going to cut down production is something to go by, and if global growth continues to be reasonably all right, I think there's a case for these companies to do well, because they have been in the dumps for too long now. So therefore, I think even cyclically things can improve here. But I mean, these are cyclical plays. You have to keep track of what is happening in the international commodity markets and play this. I don't know whether it's a big secular story. I don't think so. But on a cyclical basis, if you read the tea leaves right on the international commodity markets, I think probably there is money to be made here.
Okay, just to elaborate a little bit more on the story that we're picking up from Reuters, this is to improve the air quality. So the provinces, that's the Hebei Province's Communist Party head has said that we would rather sacrifice GDP in order to guard the blue sky in Beijing. And this 14 million ton of capacity cut that is planned in 2019 and 2020 would amount to about 5.5% to 6% of its overall capacity, because this particular province produced 237 million tons of crude steel in 2018. So that is about a 5 to 6% capacity cut from this particular province. And China, of course, on the whole produces, I think, world's 25% of the world's overall steel. So not insignificant. And you can see the Shanghai rebar steel prices rallying, moving up close to about 1%, and even the Indian steel makers are quite buoyant in trade. Just one final question, Mr. Bhatt, any portfolio changes that you're recommending?
Not really. I think for the last few months at least, the only game in town was private sector banks. It was probably non-NBFC, non-PSU bank sort of private sector entities, then probably some amount of consumer-facing companies, and assuming that there is going to be some revival in the economies, industrials, and engineering construction companies. I think these are the only ones that these are the games in play. That continues. I don't think anything has changed there.
Okay. All right, Mr. Bhatt, we'll leave it on that note. Thank you very much for joining us and giving us your market view this morning. All right.